Nearly $300 million vanished from KelpDAO in a single exploit, and security researchers warn the same vulnerability may still be hiding in other major restaking protocols. Attackers drained the protocol by manipulating a smart contract loophole that external auditors had previously flagged as low risk rather than critical. The stolen funds were rapidly converted across multiple blockchains before the team could freeze contracts or alert users. KelpDAO has since paused all new deposits and opened a recovery portal for affected wallet addresses. Blockchain security firms estimate the attacker moved at least 40% of the haul through privacy mixers within the first 6 hours. The breach is now the largest DeFi exploit of the quarter and has erased months of user confidence in restaking yields. Industry leaders say the incident proves that restaking protocols need far stronger audit standards and real-time monitoring before they can handle institutional capital. $500 million in leveraged crypto positions were liquidated overnight as Bitcoin crashed through the $78,000 level for the first time since early May. The sell-off wiped out long bets across Bitcoin, Solana, and XRP, with futures markets showing the heaviest damage on centralized exchanges. Traders had piled into bullish positions earlier in the week, leaving the market vulnerable to a sudden reversal. Data from on-chain analysts shows that more than 90% of the liquidations came from long positions, not shorts. Bitcoin now trades near $78,173, down roughly 1.7% in 24 hours. Ethereum and Solana followed with steeper declines of 2.4% and 5% respectively. The Fear and Greed Index has slipped back to 31, firmly in fear territory, and analysts say the cascade reveals how over-leveraged the market remains despite weeks of sideways consolidation. Harvard University's endowment quietly sold its entire position in an Ether exchange-traded fund during the first quarter, while Abu Dhabi's sovereign wealth fund was adding over $90 million to its Bitcoin ETF holdings. The divergent moves highlight a growing split among institutional investors over which digital asset deserves long-term capital. Harvard's exit was disclosed in a routine regulatory filing and marks a retreat from the university's earlier crypto experiments. Meanwhile, Mubadala Investment Authority increased its stake in BlackRock's iShares Bitcoin Trust to more than $200 million in total exposure. The contrast is striking. One of the world's richest academic institutions is pulling back from Ethereum, just as a major sovereign fund doubles down on Bitcoin. ETF flow data shows institutional Bitcoin products have absorbed nearly $1 billion in net inflows over the past month, while Ethereum funds have seen modest outflows during the same period. The divergence suggests sovereign wealth managers view Bitcoin as the safer institutional grade allocation. Subscribe now.